Okay, so with that, I'll let Adam take it away first.
Great. Thank you so much, Danielle. First, we wanted to talk about down payment assistance programs and helping those borrowers that qualify but are just a little bit short on the funds. So, I'm going to talk about down payment assistance, seller assistance, and some other things. But first of all, down payment assistance programs, we have a great one with the FHA. It is a 0% down program for qualified borrowers. There's a small second lien or a small second mortgage that covers the 3.5% down payment requirement from the FHA. And what's nice is the FHA allows up to 6% seller assist. So what that means is you can have an FHA borrower that doesn't need any money at the table. That FHA second loan combined with either a local program or seller assistance can meet that goal. Conventionally, it is a little bit trickier. With conventional loans, we have a 1% down program for qualified borrowers, but there are income limits, and it's based off of 80% area median income. And what's nice though is, unlike USDA limits, it does not take into consideration the entire household income. It's just what we have on the application. So we might have a two borrowers on a loan. If one borrower's income is not needed, we can take them off the loan and still qualify for that 80% AMI requirement. We can even drill it down further. And if we have someone with multiple layers of income, where let's say they have part-time jobs, or even if they have a commission or bonus aspect to their income, we can use just their base income. So we can selectively choose what income we're using on that file. And a lot of times we can qualify borrowers even if their income at first glance might be over that 80% AMI limit. And what that is, it's for buyers that qualify for the 80% area median income. They're typically required, along with first-time home buyers, to have a 3% down payment. So in this case, what the lenders are able to do is they can give a 2% seller credit to account for two of the 3% that's needed, where our buyer is only bringing 1% to the table. Additionally, if the buyer qualifies for 50% AMI, we can get them an additional $2,500 towards closing costs as well. And that program can be combined with seller assistance, which I'm going to go over in just one second. In addition to that, we also have local programs. It's typically by the county level. And we have to be careful because many of those programs are income based, where the buyers would have to qualify based on their income. And that is something we can help them apply for, but they don't get that grant or that money directly through us. Often they need the application information, but it's something that we can help the buyers apply for directly. In addition to that, we have seller assistance. Now, as you know, seller assistance can only go towards the closing costs. Seller assistance it can't go towards the principal balance of the loan. It can't go towards the down payment, but it can go towards their closing costs. So for FHA and USDA loans, as Danielle knows, the USDA loan is a 6% seller assistance cap on all loan sizes and all loans for FHA and USDA. And typically what that means is that 6% is going to pretty much cover everything that a buyer would need, unless they're paying an exorbitant amount of discount points, which, by the way, that seller assistance can go towards the discount points as well. It's just with those discount points, sometimes that 6% limit can be reached on the closing costs. For conventional loans, it's really going to be determined by the down payment. If the buyer is putting less than 10% down, we have a cap at 3% on seller assistance. If the buyer is putting more than 10% down, we can go above that 3% and go up to 6%. For VA loans, it's across the board at 4%, which is typically enough to cover all the closing costs for a veteran on a transaction. In addition to that, the one thing that I did want to cover that's a little bit outside the realm of the down payment assistance and seller assistance is a non-arm's length transaction when buying from a family member. Oftentimes, this is a little bit confusing because someone's selling a house and they want to sell it at a very discounted price. Well, the problem is, with a non-arm's length transaction, meaning it's someone that there's a pre-existing relationship with between the buyer and the seller, the non-arm's length transactions are regulated, so you can't just discount the price. But what we do is we can draw up a contract where they're buying the house for the market price, and then the sellers are giving a gift of equity. As long as they are a family member, they can give a gift of equity to cover that down payment between the purchase price and what they wish to have as the loan amount, which in most cases would be what they would want to sell the house for anyway to that family member. In addition to that, the gift of equity again only goes towards the difference between the loan amount and the purchase price, but we can also build back in seller assistance that would be based off the same limitations that I just covered with the FHA conventional and VA loans. But what sometimes people forget is we can still craft that to where the sellers are walking away with some funds. So I've had a few recently where the sellers needed to cover lawyers' costs or other things like that. We can work that into the number to give the sellers or the family member what they need when selling that property. So any questions on the down payment assistance, seller assistance, or the non-arm's length transactions from the room? All right. Well, with that, I will kick it over to my colleague Jackie, who is going to talk to us a little bit about citizenship statuses and what to know.
Thank you, Adam. So then what we need to know about the citizenship status. There are multiple statuses, and then we have the permanent resident aliens, which everybody knows those as green card holders. They're lawful permanent residents. They have a green card, and for lending purposes, the guidelines are the same as buyers with citizenship status. We also have the non-permanent resident. They need to have either a visa or a valid EAD, like employment authorization card that is required. So we recommend to get a copy of the EAD because we need to see what code they have. And we had to verify with the lenders as of their guidelines. And then we also have the foreign nationals. Foreign nationals is a buyer that does not have the requirements of the two options above and typically requires a lender portfolio loan option quality. Do you guys have any questions on that?
How do we ask that? Like what do we ask somebody? Like what's the verbiage we would use?
So when we talk to our clients, right, when we are taking their applications like over the phone, or just having that conversation, I ask, so are you a U.S. citizen, permanent resident, or non-permanent resident? And they feel comfortable with that question. So it's a clear question where you don't make them feel like, oh, why are they inquiring about my status? Sometimes they're going to let you know that they're here working with a work visa, and that is totally fine. So if they have a visa, they might not have a work permit, but they have the visa that is authorizing them to be here in the U.S. Working.
So a work visa would be the non-permanent resident.
Correct.
Okay. This is just an area that I personally am weak in, and so I was looking forward to this because I don't understand the different categories because it just hasn't been my sphere of influence that I have a lot of knowledge in this.
And Danielle, to second voice that, it's also a touchy part of the conversation because we're just getting to know these people.
Sure.
And you want to be welcoming, you want to be open about things, and you can often tell that it's a sensitive issue. You know that the people are concerned about it. So what I kind of do is a check down, right? And fortunately, it is something that is right there when they fill out their initial information on the application. So it's a natural part of the conversation to lead into what is your citizenship status. What you need to know, and the real the real thing that we would need to know is, are they a green card holder? Are they a permanent resident alien? If they say yes, no more questions. We treat them just like a citizen. No difference in pricing. We get literally there's no difference. If they say they're not a green card holder, or they're applying for it, or it's anything other than an immediate yes, Then we want to go right to, could you send us a picture of your Visa or the EAD card? And that will have the code that we then need to go to lenders because all the lenders have their own way of approving. Some lenders have an automatic list where it's like, yeah, as long as it's this and it's valid, we just treat them like a normal conventional loan, no big deal. So that seems to be the quickest check down. If they're a green card holder, we move right on. If they're not a green card holder, we just get a copy of the Visa or the EAD card and then just keep going right on with the application and keep the momentum going.
Information, thank you.
Yep. And then foreign national, that would be someone that doesn't have any documentation. We could still do loans for them, but then that typically ends up being like a portfolio loan where, then you're kind of opening up a different ball of wax because then we're talking about bank statements in other languages that need to be translated. And, we've done them. We have lenders with foreign national programs, but that can be very difficult.
Excellent. Thank you. All right, next is Jake to tell us what's going on with insurance.
Hello, good afternoon. Insurance, yay, super fun. Uh,
No one
I was
wants
on
to have to
a
have.
yeah, I was on a call a couple of weeks ago about the insurance market and what's going on. We got in pretty good detail there, so I'd encourage you if you haven't checked out that video, definitely check it out. There's some good stuff on there that'll kind of give you some insight of what's going on in the marketplace anyway. But there are two things that I wanted to hit on quick for this call, kind of keep it short and sweet. If I were a betting man, I would imagine most of you have run into some sort of insurance issue over the last couple months. The market is not in a magnificent spot, is probably the best way to look at it. There's two things that I wanted to touch on are roofs and then pricing, right? So I'll talk about roofs first, super fun stuff. The days of unknown roofs or we're not really sure how old it is from a various different reasons for that, right? Are kind of more and more hard to navigate in the current marketplace. Roofs are a hot topic and a good way for an insurance company to say, hey, we don't want to necessarily insure this house, right? So the age there is 15 years or newer is kind of the magical number that a lot of carriers are drawing the line on, so to speak, meaning if the roof is older than 15 years, they're not interested. So they'll decline and not your client will have an ability to insure. There are options for to insure roofs that are older than that for sure. But it just becomes a little bit more challenging, right? It might take a couple touch points as opposed to one phone call, quick, hey, I need home insurance, done type of deal. There are companies that will go up to 25 years or newer. That's kind of the cutoff. There is one company that I have in my portfolio that does not ask about age of roof, which is very unique, but they will go based on inspection. So even in a situation where if we don't know the age of the roof and we're kind of just guessing, right? Hey, we think it's 10 years old or whatever, everything's contingent on the inspection of the insurance company itself, which, as you can imagine, is going through the insurance company's lens, right? So it's not necessarily the traditional home inspection that you would think of and that type of communication. The insurance company will inspect the property at their terms, and if something's wrong, then the way that they communicate is via letters. A lot of times we'll get those same letters and we're able to intercept for your client if something like that happens and help provide a solution. But it just makes the process a little bit muddy, right? Where we want to try to make everything smooth. So I would say if you're having an issue with the roof or you're unsure about it and you need to try to find to get a client a policy, don't be afraid to reach out. Those are conversations that I am having all day, every day, right now. Again, super fun stuff. I'll kind of pivot to talk about pricing a little bit. As you can imagine, roofs have some impact on insurance pricing and how that shakes out. The insurance market, as I mentioned, is a little bit of a mess right now. As far as pricing is concerned. So, for example, the average cost of home insurance in the state of Pennsylvania is just over $1,600 a year. If you take out our big markets, Philly and Pittsburgh, and kind of zone in on Dauphin County, it's almost $1,400 a year. So I say that just to kind of be mindful of your cost estimates, your cost sheets, especially if you have a client with a lower credit score or you foresee possible DTI issues in the future, to kind of keep those numbers in the back of your head. I think if we were talking 3 or 4 years ago, the average cost of home insurance has increased significantly over the last couple of years, again, due to several different factors. So if I had some advice there, tune in on the roofs. Big deal, as we talked about. If you have DTI issues or low credit, get ahead of those. Have your clients reach out and shop early, right? So you can work through those processes, and just kind of keep communication clear as you work through. So, any questions?
No sweat.
Yeah, I had a client and I knew that they were buying the house as two buyers, but only the fiance, the one fiance was going on the loan because the other fiance had bad credit. But I knew they were both going to be going on that insurance policy. So I estimated 1,800 for their insurance premium. And thank God I did, because then when it came back at 2,100, I was able to say, oh, look, we were so close. We were only like $300 off. So like, look how close we were, and that they were happy. They were like, oh yeah, we were so close to the estimate. So setting those expectations early with your clients and estimating high is going to be so critical to the success of the transaction, and making sure we're not getting those pre-approvals out of line with their monthly payment expectations, because that's a huge component right now. So definitely just jacking those things up, is important in the beginning. I did put Jake's information in the chat if anyone's interested. I'm sure you all have your people, but Jake's just very knowledgeable, and you'll see him on here regularly and often. So if you don't have a guy or a girl, and you need someone to troubleshoot a roof issue or something like that, his information is there if you have questions. But any questions for Jake? Any insurance questions?
Yeah, Jake, I did have a question. At what credit score do you see the pricing for buyers really changing? Is there a threshold, or what? Can you speak to that?
Yeah, it's a great question, because we're not necessarily pulling credit scores per se. They're more across soft credit. And I don't see those numbers personally, right? So it's not like I have access to that person's credit score. Generally, when I'm speaking in real estate terms, if you're having somebody that it is a known credit issue, right, as you're going through the process, those are the ones that I typically will say, hey, that's a good idea to get ahead of the insurance as soon as you can, right? So we can work through those things. It's not a true credit score in my world per se. It's called insurance history. And credit is a big part of that, which is why I typically bring it up. But it's also a litany of other factors, right? So there could be some cancellation issues that they had previously, lapse in insurance that they've had previously. Claims history plays a big part of that. All of that is a part of their insurance score, which could create an issue down the line with DTI, if that makes sense.
Yeah, and you almost have to look at like price point, sadly, because if you think about a borrower, and because we have people here kind of all across the Eastern Seaboard, our price points are going to be different. But if you think about what would be a lower price point in your market, because those houses are going to be your 100-year-old houses, their premiums are almost going to be disproportionately higher to, a higher priced home because it's newer, where that premium is going to be a little more lower, kind of, relatively speaking, because it's in nicer, newer condition. So I know when I have a borrower, again, who is in a lower price point, I know those houses are going to be older and are going to be a higher insurance risk. So I'm jacking that premium up. So those are the kind of factors you want to keep in your mind when you're kind of estimating those. And of course, as agents, we're just estimating. But like Jake said, if you think you have a problem person, definitely getting that checked out often, or not often, but early in the process. I have folks whose house burnt down and I just helped them buy a house and we're going to be selling it behind, and that was something we were concerned about. So people like that, you want to keep that top of mind. So excellent.
And Jake, I did it. Last question, last follow-up question.
No, it's all good.
A lot of my buyers seem to, kind of, they don't think about insurance until they're under contract, right? And then they're scrambling around. And a lot of times what they're doing is they're just jumping online, filling out the information themselves and just getting an automated quote. Those always seem to come back not accurate, either way too low, way too high. Can you give a little recommendation on why they vary so much when the borrower fills that out or the buyer fills it out? And how do we kindly tell them, call an insurance agent, talk to somebody that'll walk you through this?
Yeah. The insurance world, in my opinion, is a little bit broken, right? Where you can go online and input that stuff. And you think about it, the person that is inputting that stuff is your buyer, and they have no idea what they're doing as far as an insurance respect. But that insurance company on the other end, all the big players do it. It's kind of like it's almost a fly trap, right? Hey, come here, look at this pretty price that we can give you. And then once all the factors are determined and everything gets shaken out through an underwriting process, which isn't done initially when they're just looking for a quick price, that's when, hey, things change and they can change drastically, probably to the point where they say, hey, well, we're going to insure this for $800, red light, stickers, sunshine, and then, oh, sorry, yeah, we can't insure you at all type of deal. So I would just be direct, and that's my form of communication. Hey, the insurance market is a little bit challenging right now. I recommend that you find a broker that can shop the market, has a bunch of different options for you, that will find the right insurance policy for you and for this house specifically, or recommend somebody that you might have a relationship with. If you don't have a relationship, I'm happy to have those conversations, but in my experience, that's always the best way to kind of approach those situations.
Awesome.
Yeah, that makes sense. Thank you.
Yep.
Well, I have two tidbits to share because I'm obviously very nerdy. And so I know all kinds of wacky little tidbits that are not enough for a webinar. So I will save them up for these little monthly updates where I get to share them. So one I actually thought of on the fly as Adam was talking, since he mentioned non-arm's length transactions, and sometimes we do those as a transaction licensee or however we structure it on our side, but sometimes people come to us and we just help them effectuate a transfer. And so as Adam mentioned, structuring those gifts of equity and things, I love troubleshooting those kinds of things and structuring a deal. I recently discovered a really great little niche product that Freddie Mac has. And maybe Adam doesn't know this, so maybe he'll learn too, and he'll be able to give this to his clients. But Freddie Mac offers this really neat exception. And this is a great value add for you guys for your sphere of influence. If a parent has a house and they want to sell it to their children, right? Part of the estate planning process, we start to divest our assets to our children. So parent's going to sell to child and parent's going to stay living in the property. I just did this with my father a year and a half ago. So he still lives in his property, but I bought it from him to get it into my name. That's technically now an investment property, right? I bought an investment property because I'm not living there. Freddie Mac allows that transfer to be done as an owner-occupied loan at owner-occupied terms. Down payment, interest rate, all of the things you can do it owner-occupied. Under that scenario only, parent-child, parent remains in the property, child buys it. So, super cool little niche exception.
And I would imagine it's they can have two owner-occupied properties.
Yes.
Like
So
you can still own their house and then get the pricing of the owner-occupied. And then same would go for like down payment and all of the pricing.
Yep.
Wow.
Exactly.
That's big.
It's huge.
That's big.
It's a huge value add that you can, again, give to your sphere of influence and be the hero. Okay. Because again, most loan officers don't know that. I found that from a loan officer, told it to another one, and they were like, oh my gosh, like, ta-da. it's super cool. So like once you know something really neat, you can share it and be like, ta-da, I'm the hero.
Do you happen to know what that product is called, Danielle?
I don't even think it's a product. It's like a Freddie Mac exception.
Okay.
So it's like an allowable thing, but it's the Freddie Mac product, which we usually run things through Fannie Mae, which I don't know why Fannie is so much more popular than Freddie, but
More user friendly.
is that it? It's just
Yeah, like Freddie just gives you numbers, whereas Fannie Mae will say, "Here's what you're doing wrong. Here's why you're not qualifying."
okay.
It's more user friendly.
Software preference. Well, anyway, it's a Freddie Mac thing. So, but yeah, so it's just super cool value add to your clients. And I'm all about value add because right now we got to keep the human element in it. We don't want to be taken over by the internet. So the more we know and the more we can share, the better we stay in the game. The thing I was going to tell you guys about, which is super cool, is most of us have heard of 1031 tax exchanges, where we can roll our capital gains from the sale of an investment property into another investment property. And there's, time parameters, you need a qualified intermediary, all those kinds of things. So it has to kind of be worth it to do that. Well, I tripped onto, because I spend my time into funny places where I trip over things like this, but I found an interesting little thing called a 1033 tax exchange. A 1033 tax exchange is when your client has lost an investment property or a business or something like that due to, most importantly, eminent domain. But I also found today, I was just double checking some things. It could also be a natural disaster, but a presidentially declared natural disaster. But the instance that I was looking at was eminent domain, because around here, I don't know where everybody else is from today on the call, but we have lots of highways going in and exits and a lot of eminent domain going on around here. So we had a restaurant owner lost her restaurant due to an exit getting put in. So she got a payment from the government for her restaurant. So what you can do with the 1033 tax exchange, which is different than a 1031, is you don't need a qualified intermediary. They can take possession of their funds, and they have 2 to 3 years to find the replacement property. So that's kind of cool. It's like 2 years from the tax filing after the thing. So that's why it's 2 to 3 years. So again, talk to an accountant to get the exact dates on your person's scenario. And if it's a presidentially declared disaster area, you actually have 2 additional years, so up to 4 years. So it's just really cool that if you know somebody whose property is being affected by eminent domain, they can actually roll that and not have to pay capital gains on the government payout for that property, because you would have to pay capital gains otherwise. But they don't need a qualified intermediary, and they have a lot longer time to roll that into their next property. So a super cool value add. And the only last thing I was going to share, I'm curious to hear what other people think, but at least up where I am in Central PA, I'm seeing definitely some balance coming back to the market with buyers getting much more favorable terms on their transactions. Is anybody seeing anything in your markets? How's everyone else doing with buyer terms on deals? Anybody want to share? Anyone brave enough to unmute? Adam, you don't count.
I'm seeing inspections. I'm seeing seller assistance. I'm seeing after the fact things come up and sellers are giving some concessions for little things that come up. It's wonderful.
Yeah. So I'll just show you, if you're not brave enough to unmute, I'll just show you a graphic I made for myself, really. But think about starting to do your marketing. I know it's really cold out there right now, but the spring market will be coming. Get the word out there. People are slower to this information than we are. We see what's happening live time, but a lot of people aren't. So I made this graphic just to show buyers out there, some success stories so that they can see about getting, kind of getting out there so they're not as scared of the market that things are happening. So just for me, some success stories. I'm sure everyone has their own versions, but just to get going, right? It's our job to inform people of what's going on in the market. So just sort of an encouraging, like sometimes it's, we're busy and taking the time to stop and make a graphic. Trust me, I don't have time, but I'm just gonna have to stop and make the time, because if we don't get the word out, buyers are continue to be hesitant to enter the market for buying. And so I wanted to make sure that I did that. So just to share that as well, just another tip to get people motivated and get them doing buyer consults. Now's a good time to get pre-approved and start thinking about the process, get that tax refund put aside and things like that. So any other questions or anything like that, feel free to always throughout the month, if you want to email and send any topics or questions you have for us to address on here. We're happy to talk about things from month to month. Or for webinars, the bigger ones also. Any topic suggestions, always feel free to reach out. Well, if there's no other questions. It's been a pleasure having y'all, and thanks for listening. Hopefully you learned a few tips and tricks.
Thank you, Danielle. Thank you, Jake. And thank you, Jackie.
Yeah, thanks for being on, everyone. And we'll
Thank you guys.
next month.
Yeah, thank you for having us.
Thank you.
You're welcome. Have a great rest of your day. And for those in the north, stay warm.